Good evening, everyone. Time for another silver update. Now, this is the daily chart of gold crossed over the Dow Jones 30 average provided by netdania.com. You can click on the link below. Now, this is the paper physical cross that I've watched for a very long time. This really isn't paper physical because this is actually paper because it's paper stocks and paper gold. That's what's determining the price. But nevertheless, it is important to watch this because this is a sentiment indicator as to whether or not this type of thing is going to continue. I've contended for the longest time that it's actually going to reverse. I think we may actually have an indication that that process is beginning. We thought we had it back here, so it doesn't mean it's certain. But one thing that's critical is that this very long-term trend line has been significantly violated. So you can see that there's a number of touch points and near touch points. We've got 1, 2, 3, 4. This one was violated, but you can see that this is a clear violation, the largest we've had since we've been way up above it. The last violation was where they were actually inversed from where they are right now. Now, the bottom that seems to be forming in gold is also very important. We have just recent action after hours, really, where gold has significantly strengthened. And we'll just go straight to the gold chart here. The silver chart is not looking as strong as the gold chart, but that's to be expected. Gold normally rallies before silver rallies, and then silver plays catch up, normally a really rapid type of catch up. So let's go out to the 2 hour here so you can see how this is in perspective. So our trend lines are going to be like this, pointing down to about 1275. Our next trend line is going to come in right around either that top or this top match with it. And you can see it's a correction back to the trend line and then a move back up. So that's typical thing to see in a rally situation. Then of course we've got the beginnings of a uptrend line. You can see about 4 touch points on that, and then of course we're going to have this overhead resistance, the first point being here at about 1271 or 1270, the next one being about 1280. These are going to be the 2 points we have to watch. Those are the normal places where you bounce off and go down if you're going to roll over and go down. Now you can see that when we had the test here of something similar to that in this lower area, you can see the rally into it, huge sell-off, and that was Fed driven, news driven, and then a spike up. And you can see we're starting to clear this area. So this is starting to be past price action. So let's pull in the volume and see how much of that is actually important volume. And you can see that there is a significant area of volume. Now, this area here is actually as significant or more significant. So to counter or to reverse this, we have to get all the way up to where this started, and that's going to be through this 1270 point. So 1270 is going to be the point for gold where we can fairly safely say we've put in a bottom, and that this volume is all the paper buyers coming in, taking the other side of the trade. As I said, with silver, we're not nearly as strong here. I was looking for volume to come in that matches this volume over here on the right side of the shoulder. We're not really getting it. We're not nearly as strong as gold. But that's to be expected if we know the history of it. So looking at the currencies real quick, we had in the euro kind of a bounce rally. You can see here it's kind of mirroring what's going on in the metals. With the Japanese yen, we had a fairly big sell-off, and it seems to be continuing. So again, a lot of volume here making this topping formation, and that's going to be the strength of the dollar against the yen being a way that the central bankers have created this false rally, this false strength that's in the dollar. So let's go over and take a look at some articles here. Now, the first one I want to look at is this issue about Harvey Organ. Now, most of you know that Harvey Organ's blog was taken down, and there can be any number of reasons for that. You have to remember that Harvey Organ's blog was harveyorgan.blogspot.com. So that's not his own domain. That is domain hosted, and there's a lot of these blogging sites. There's WordPress.com, there's Tumblr, and all these others. There's a ton of blogging sites where you can just sign up for a free blog and do that. So, but this apparently is an update that came in, and I think it was Friday afternoon that Harvey's blog came down. So I'll read this. As many of you know, my website was pulled Friday afternoon. I could not post. Here's a copy of the email that I received, support@blogger.com, October 10th. To me, Blogger. Hello, I would like to inform you that we received a court order regarding your blog. harveyorgan.blogspot.com. In accordance with the terms of the court order, we have removed content previously located at harveyorgan.blogspot.com. A copy of the court order we received is attached. Thank you for your understanding. So I had initially heard that he wasn't given a copy of the court order, so I don't know. This seems to counter that. I have sent 5 emails to Google for the copy of the court order to no avail. I will be creating another website of my own. JS, Sleer, and Silver Doctors have been gracious enough to allow me to post on their websites. And I'd like to say that if Harvey needs someplace, I'll go ahead and host it on my cloud site if that's necessary. Today, gold and silver got a huge boost, and then it goes into that. So what is the significance of this? A lot of people are attaching a lot of significance. I don't really know. I can just go through the rumors. And I'm going to talk a little bit about the importance of the COMEX numbers, and that's something that Harvey has covered continuously and more in depth than anyone. But what's behind it? A lot of people are speculating, well, it's 1 month after he made his big prediction on the video, and there's a big conspiracy. Other people have said, well, he doesn't properly source his sites. Again, I don't know. We'll have to wait for it to come out in the wash. Harvey can obviously go ahead and do another interview with Greg Hunter. He can do an interview with Silver Doctors. He can do an interview with SGT Report. He can do an interview with a lot of people to clear this thing up. So we're really not going to know, and I'm not really going to speculate until Harvey comes out and says what happens. It might be something just that a link back wasn't properly approved. I get on the blogs that I run, I get complaints all the time about links. And one of the reasons I've had to remove comments is because of link back attacks and various attacks. There's all kinds of attacks. If you run a blog, you're going to have all kinds of attacks. That goes with the territory. So I'm going to wait before I make any decisions about what happened to wait for Harvey Organ to come out and say what happened. But let's look at the issue here, and I wanted to look at the COMEX Depository Warehouse gold and silver stocks. Now this is goldbroker.com, and you can see here this is quite common. Reproduction in whole or in part is authorized as long as goldbroker.com, all rights reserved, is mentioned with a link to this page. So obviously I'm going to put a link to the page, and I'm going to mention here that goldbroker.com is the host of this. And here's a couple of charts here. This is the type of stuff that Harvey Organ covers. And you can see the COMEX Depository Warehouse gold stocks, and you can see the COMEX Depository Warehouse silver stocks. Now you got 2 delineations here. You've got the dark, and that's going to be registered stocks, and the light is eligible stocks. And you can see the same thing in silver. What's the big difference? Well, the first thing I would compare here is we've got about 8 million there. Is that our number? 8 to 9 million. And we've got 180 million there. So what's the ratio there? That's about, what, 25 to 1? Certainly not the 70 to 1 ratio that we see in the price. So that's the first thing I'd take out of this. The second thing I would note is that there's this very large increase in these registered stocks as in silver as opposed to the registered stocks in gold. You can see that the registered stocks are nearly 90% of gold, whereas the registered stocks are really only 65% or so of silver. What does that mean? I have no idea. And frankly, I don't really care. And the reason why is because I've pointed out before from the FOFOA article that mentioned in an obscure note that COMEX is only responsible for 5% of the actual physically delivered silver in the world. So if you think about those numbers, we're talking about 750, 800 million ounces. We'll just say that it's about 40 million ounces that the COMEX is actually delivering every year in silver. Well, 40 million ounces is less than the amount of silver that the U.S. mines, but that amount is actually going to be less than the amount of silver eagles, not to mention what is exported, what is used in industry domestically, what is exported for industry in Asia. So for me, the fact that the COMEX, and I may be wrong on this, but I have not seen anyone counter these numbers that FOFOA gave, that the COMEX is only responsible for 5% of physical delivery. For me, the numbers on the COMEX are completely irrelevant. They don't mean anything. The only numbers that would matter for me are going to be the numbers coming out of the LBMA, which I believe the vast majority of the precious metals are actually physically delivered, and then perhaps in Japan, and then coming up here now in China. So I really don't attach a lot of importance to the numbers out of the COMEX, and it's great to have Harvey Organ breaking that down every day, but it's just not something that I look at because I don't believe any of these numbers are real. I can't trust any of these numbers. I can't trust the COMEX, I can't trust the CME, I can't trust the CFTC. I pretty much have to look at other things and just kind of go by anecdotal information. So we'll see if Harvey Organ comes back and gives us an explanation. But until that time, I'm just not going to make a decision. Now, let's go into some analysis about what happened in the stock market today. This is from Zero Hedge, and this is very important because I've pointed out a number of times that the stock market can just absolutely crater. I showed you with GT Technologies, the Apple supplier. By the way, I think they're down again another 50-something plus percent today. And so paper can just go to zero overnight. That's the way it works. And we saw an incredible sell-off. Now, this, I don't know if you follow the overnight futures, but if you do, and there was a Zero Hedge comment about it, an article they posted, and I remember going to bed last night with the futures, the Dow futures being down 130 points, and I remember waking up in the morning and seeing them up 35 points. And there was a lot of speculation as to why that ramp occurred in the middle of the night. But then, of course, we had this kind of semi-holiday today where apparently the bonds did not trade, the stocks did trade, and then we had this event here. At 15:32 ET today, that's 3:30 p.m. Eastern Time, Columbus Day, with half the market absent, somebody apparently having waited to see if the almost ubiquitous 3:30 p.m. ramp would occur, decided it was time to dump $750 million of notional U.S. equity exposure in 1 second. The results of this forced liquidation or utter disregard for fiduciary duty. Now let me explain to you this. This is something that's been cited in the precious metals markets. The fiduciary duty of a broker. You've heard the term front running, and that's a illegal or at least immoral practice where if a broker has a very large sell order or a large buy order, what they do is they front run it and they put their personal order in place before they execute the other order. And of course, the weight of that large order carries their order into profitability. They liquidate, they make a nice little amount of money on the side plus the commission. So they have a fiduciary duty to execute a trade to get the most profitable execution for their client. So, and what Tyler's hinting at here is that the fiduciary duty was violated by dumping $750 million or nearly $1 billion in 1 second. Because obviously, if you're trying to get the best price, it's not in your interest to dump such a large amount of stock that you dry up the liquidity. You want to, ideally, you want to wait for a rally and then just kind of slowly sell into the rally. And then as it's going down hard, you can maybe try to dump. But you certainly don't dump everything at once. And here you see what it causes. A complete collapse of all liquidity in the S&P 500 E-mini futures contract, the world's most liquid equity exposure vehicle. Now, I pointed this out before that stocks aren't really even stocks. They're removed 1, 2, and 3, and 4 times, and these ETFs are derivatives on stocks, but the derivatives actually move the stocks. And the way that that works is that if you sell a whole bunch of mini future contracts or even future contracts and someone takes the other side of the trade, in other words, they have to buy, then they have to hedge themselves and they have to go into the real market and take an opposite position so that they're at a 0 point. So even though the futures are a derivative of the real market, they still affect the real market because the people on the other side have to hedge themselves. Consequently, they have to take a position. Same thing as I pointed out with silver. If you're a dealer in silver and you're moving the price of your physical coins along with the price of silver in the paper market, then obviously you have to have a position in the paper market or you're going to lose money, end up selling for less than you bought, and that's a recipe for going out of business. So that doesn't happen. So the question is, why would somebody with a fiduciary duty to make the most amount of money for their clients sell nearly $1 billion in 1 second? And you can see here, there's the sell-off, the recovery, and there's a lot of analysis. I'll let you go through the article. And what is going on here? Well, I think it goes back to what I was bringing up. And the major chart that I like to look at is the Dow Jones Transportation Average. And just through experience, I found that this average is more sensitive, it's more volatile, and it seems to lead the market faster. So let's actually go out to the weekly here so we can see the long-term view. Now, of course, the biggest trend line is going to be the one that starts with Obama's presidency. And that is the beginning of the money printing in March. We had the stimulus, the bailout, and the money printing starting. And you can see the money printing started 5 years ago, and 5.5, going on 6, and has continued ever since. The next important trend line is going to be drawn from that touch point, and that's this trend line that actually I've been drawing this for a while now, and this has on its own a number of touch points. And you can see the obvious violation of this. If this, I won't say secondary, I'll say tertiary trend line were to be valid, then this would have bounced. It certainly would have bounced on that one. So the fact that this is broken down and closing on the lows tells me that the next test of this line is going to be down here. Now that's going to portend a very large move down in stocks. And you can see here that this trend line, this support line is very, very obvious. This is a support line that actually goes back to before the financial crisis. You can see actually mid-2007 we have that top. sell-off and the same exact top is met in 2008, right after the Bear Stearns and Lehman thing began, then the big move down, and then a rally up into 2011, and then again another test of that, and a failure, and then finally a breakout through that in late 2012, actually nearly corresponding exactly with the re-election of Obama. And then this huge rally that is now being broken down out of. So what does that mean? Well, I think it means that it's finally time for the paper assets, at least beginning with stocks, to go down. Now, traditionally, the explanation is with interest rates that it's the old saying is 3 steps and a stumble. So normally in the past, if you had 3 interest rate increases, you'd get a stumble. Now, does that translate to quantitative easing and you get 3 lessenings of QE and you get a stumble? Maybe. I don't know. But it appears that the paper stocks are breaking down very hard, and the paper gold is starting to rally. And I think that ultimately silver is going to follow that. We'll watch it very closely tonight. I am now about, I would say, 60% in the camp that a bottom has been put in. But a move here up to 18 would put me about 80%, and a move here back up to test, say 1880, a valid move to up to 1880 would put me in about the 90% camp of the bottom is in. And we'll talk to you next time.